My name is Rasmus Olsen, and I'm Head of Sustainable Finance at 𝗥𝗏𝗄𝗃. And we are really happy to have the opportunity from Barbara and Team Copenhagen Fintech to launch this series of Insight series where we at 𝗥𝗏𝗃, we have started out the journey considering ourselves as a PropTech firm. And now we are moving into a space where we are converting much more in, we see ourselves as the fintech technology where we facilitate decarbonization strategies between banks and real estate investors. And this is a space we believe have tremendous potential way beyond our own operations. So we actually discussed with Copenhagen Fintech that we believe there is a lack of awareness about this, and there's also a lack of subject matter experts and industry leaders that can actually go a little bit beyond all the fluffy buzzwords and a little bit more into the details around how do we actually unlock this. It is clear for everyone that there are some barriers and obstacles for us to really unleash the potentials of finance and equity driving decarbonization in real estate. But we believe in 𝗥𝗏𝗃 that there are a lot of the barriers that are now no way of excuse for not taking action. So actually we start with it today where we alongside some of 𝗥𝗏𝗃's partners and subject matter experts, we are discussing how we can mobilize public capital and private equity and finance to accelerate and scale green finance. In terms of addressing these, you could say, systemic barriers, we also have a debate in terms of where are we today in terms of the access to utility data in Denmark. In 𝗥𝗏𝗃, we believe that this is no longer an excuse to not taking action. We have benchmarks on 2.2 million buildings in Denmark where we can access utility data. So the data is there. We just need to leverage it and agree on how and when. And then we will have that debate together with Enso, 𝗥𝗏𝗃, and Nykredit. And afterwards, we will have great representatives for all the Nordic banks that are represented in Denmark in terms of actually discussing. Now we know that the data is available. How do we actually move beyond not just promising, but actually grounding the decarbonization performance into finance and transactions in real estate. So these are the Insight series, and I would like to invite you all to note the calendars and stay tuned on Copenhagen Fintech on LinkedIn and 𝗥𝗏𝗃. We will soon launch the invitations for the September events, and then who knows, we might have a few other events in planning where we will start to facilitate these discussions around the fintech community in Copenhagen.
Great, thank you so much, Rasmus. Of course, these two events are happening at Nordic Fintech Week, so I need to take a second to plug Nordic Fintech Week happening from the 22nd to the 26th of September. I think this is the 4th year that we're Nordic, but before that we were a couple of years Copenhagen Fintech Week. We're expecting over 2,000 attendees. We have more than 200 speakers, many sessions, 3 stages, a lot of side events. We have a Nordic championship in paddle as well. The dream of our Chief Innovation Officer, Simon, has finally come true. So check it out and join us there. And as I mentioned, we're so happy that you're here despite the rain. So there's also a discount code because you're our good friends. There's a discount code, 20% for the tickets, friend20. So write that down. And that's it from me. Let's move on to the panel debate, and I'll leave it to you, Rasmus, to introduce the panelists.
Thank you. And yeah, first of all, let me invite Peter, Johan, and Morten to take the planned seats here. I believe it will all stack up. And first of all, thank you, 3 gentlemen, for taking the time in this very important debate. How can fintech help mobilize public capital, private equity, and finance towards decarbonization in real estate? In 𝗥𝗏𝗃, we believe that this is one of the most pressing issues to solve in real estate in terms of actually mobilizing our equity and finance towards decarbonization to really scale and take up the momentum of decarbonized and de-risked assets. if I would like to introduce and reason why I have chosen these three gentlemen, then you could say introducing Peter first. Peter is a subject matter expert, and then he's also the title of, I believe, Legacy's first client, and has also been a pivotal effort of good in terms of actually making Legacy what Legacy is today, and has also a great background in how to look at real estate portfolios from a strategic perspective and how to make it more, you could say, efficient from a fintech tech digitalization perspective. That is what Peter has been, at least about as young as I have known you, Peter, for the last 5 years or so. And then we have Morten from Nykredit, which is also one of the partners of Legacy. And Morten has, before I joined Legacy 6 months ago, I've also had many discussions with Morten around green finance when I was in NREP. So Morten has also a solid track record in terms of talking about what are the barriers, what are the obstacles, but also what are the opportunities in terms of grounding decarbonization performance into finance metrics in real estate. Last but not least, we have Johan Madsen, Head of Decarbonization in Urban Partners, a former colleague of mine, and Johan is also the mastermind behind the logistics, the logistics divisions of NREP in terms of grounding solar panels into the rooftop of some of the largest solar PV installments in Northern Europe. So Johan has also a large experience in terms of real estate investments, and also from a background from 𝗪𝗏, but more on the renewable energy side and investments. So Johan is also a very, very good candidate to see what are the bigger picture, and then also double down on what are the specific assets that might be more favorable to start with. But first of all, thank you all three for joining us. And we will go about in a round, and then I will try to maybe push you a little bit around to see if we can get some fruitful discussions. Discussions is a positive note in this context. It's not like argument, right? So it's just for really, really getting out. And if you have any questions from the crowd, then please raise your hand, and then we can have an interactive dialogue. But first, let me start with you, Peter. What are your top 3 strategic reasons for decarbonizing ATP's real estate portfolio?
Good question. Just in terms of legacy at ATP, and especially within the ESG department, we have sort of the approach that you can talk a lot about startups. You can offer special finance solutions to startups, but the best way we can actually get a good community going is buying the products, with using the products, sharing our data, and giving feedback to the companies that we work with. That's what we have done with Legacy. It's been a bumpy road, to be honest, but we're at a good place today, which was not the case 3 years. But that's great. But back to your question. Well, basically that 3 main reasons. Stranding assets is a huge deal in our sector. You know, that we need to have assets, or make sure that we don't have assets that fall behind sort of the standard that is in our market. So that's the first reason, and we can elaborate further on that later on maybe. The second reason is very basic saving on operational costs. You know, every time we save a kilowatt-hours of energy somewhere, it's beneficial to us, to our business case, towards our customers. That's one very simple and not very sort of new reason for doing that either. And the last part is actually to be able to attract the right customers. And what are the right customers? You know, the ones that are actually sharing our sort of approach to ESG, that wants to be able to, or be part of our journey towards decarbonization. And when I say that, it's well, aren't all your customers really keen on saving? To be very straightforward, no, they're not. They're not. So it's not just a fact that everyone wants to be on board. It's something that we need to be very careful on choosing also the customers that we want to play with. And that's not just because we have sort of a special position in the market. We can pick and choose our customers because we cannot. We do it only through the product that we have. And if that product is outlined and not sort of future ready, they won't stay with us.
Thank you, Peter. That was very, very specific. Can you beat that, Morten, from the finance perspective?
Well, I'll try. Well, as Nykredit, we are the largest lender in Denmark, so we roughly finance every other building in Denmark, and with that comes a large responsibility. So we are owned by Nykredit, which is actually the customers who are owning Nykredit, and then from that we have a very strong mandate to be at least pushing the boundaries on the greening housing and so on. The other part is risk. Roughly we have around 220 million or 220 billion kroner in real estate. Around 20 billion or so is what we call a green asset. The rest is non-green, at least to EX taxonomy. So for us, there is a big task in moving a large portion of our portfolio towards the decarbonization and positioning those clients towards the future they believe is a low carbon future. So it's a great challenge for us. And the last part is the opportunity. In the discussions that I have with some of our clients who are very much ambitious on this, and 𝗓𝗵 is one of those clients, they're really pushing back at us on how we are doing finance. So we should be more ambitious in how we do our loan terms, how we engage on ESG, and they are not expecting us to have traditional financing. They're expecting us to offer something different. So we are seeing that if we want to be relevant towards our most ambitious clients, we also have to very much push how we do.
So I hear you a little bit agreeing with Peter that maybe also ultimately losing clients if you're not kind of like at least engaging in a dialogue on actually accepting this.
I'll have Johan answer on that one.
Cool. But on that note, Johan, maybe you could take your perspective.
Yeah. Thank you, Rasmus. So representing Urban Partners here. So we're a sort of multi-asset investment platform, but real estate is really our biggest asset class, where we have our strategy known as 𝗓𝗵, where we have around 20 billion euros of real estate assets under management. And being sort of an investment platform, we invest institutional capital. So you could say institutional investors, that's our main customer. So sort of having repeated access to capital is a very sort of important reason for our decarbonization journey, really the push we get from our investors. Other than that, I agree very much to sort of what you have said so far. Sort of decarbonization of real estate assets, it's really a no-brainer because it's good business to use less energy and save a bit on the energy bill there. But then also we believe that we have some exposure to stranded assets. It's not sort of the main driver for us with the composition of our portfolio. We have sort of a lot of modern real estate assets, so stranding risk is not our main focus, but we do see then an opportunity in doing brown to green strategies. So basically targeting bad performing real estate assets if we see that there is an obvious case to sort of transition them to well performing green assets, if you will. And then once we have done that and sort of we have a well-functioning portfolio, then yes, we expect better access to institutional capital, but also to debt capital. And of course, yes, we are pushing to sort of agree on sort of what are the right KPIs to measure on. Very much agree with what you said, Rasmus. Sort of the data is largely there, but we're actually seeing sort of that a lot of that data is not being utilized yet. We're still a bit stuck in some of the, you could say, KPIs of yesterday, if you will, like energy performance certificate of a building, where most people who looked into it will realize that it actually doesn't say a whole lot about the performance of a building. But sort of we're of course growing with the industry and sort of taking one step at a time here. So yeah, very happy to work with tech that enables us to sort of utilize better data than say these proxies of performance, which there are many. Yeah.
That's cool, Johan. And now you have received some preparation, but you're now touching upon the next questions. I would like to maybe you can start that one in terms of. Now I can hear that all of you have, I would say, very, very commercial incentives to decarbonize your portfolios from your different perspectives in terms of maintaining clients or de-risking or better access to capital, which are kind of like to some degree more and more important for some of you. So maybe in terms of that, I believe that tracking your performance and so on, what metrics are in play when you actually evaluate your portfolio and kind of like discover, is this a green asset or a brown asset? Maybe, Johan, can you take up what are the dominant metrics and maybe also touch a little bit upon third-party verifications and so on in this ESG label jungle that we are facing?
Yes. So I would say the most common, if we're sort of talking specifically about decarbonization, that's in Europe definitely still the energy performance certificate, then certifications as well as that, but sort of those certifications also sometimes falling a bit short of actually determining whether an asset is well performing or not. So we have a lot of peers who are scratching their heads because they have a BREEAM Excellent certification, and at the same time the emissions from that asset is actually sort of suggesting that it should be stranded within a few years. So that brings me sort of to the next important and sort of more accurate KPIs, which is really sort of the energy consumption intensity, and with that the emission intensity, so basically kilowatt hours per square meter and CO2 emissions per square meter, and then not least for a company like ours that finance and manage a lot of construction, then the embodied emissions of constructing new real estate is actually also a very important one, though slightly less commercially sensitive than the operational. So really sort of moving from the proxies, the sort of excellent or A, to sort of actually is how much is the energy use, how much is the consumption, and then there's various benchmarks like CRREM, SBTi, and so forth that will help us determine if the levels that we see are good enough, basically.
So when I hear you say moving from proxies like the EPCs or like a BREEAM certification with no, then I'll say it's also about maybe going beyond these proxy estimates with EPC data, because that's also something that people say this is good enough that we can have. But I hear you say that no, we need to have the actual consumption figures on the table for the properties, because otherwise we will still be kind of caught in a slightly false narrative in terms of seeing the whole picture. Is that correctly understood? Or?
Yeah, I think so.
Cool. Morten, which metrics do you apply when you are looking at your lending book?
Well, first of all, we have, just to give a scale, it's always a good idea giving a scale of this. We have around 50,000 properties of loans in relation to real estate. And from a high level perspective on our reporting, we use CRREM and SBTi. I don't know if anyone in the room knows what CRREM is, but it's a benchmark tool in relation to decarbonization roadmaps for real estate. And I think it's become an industry standard, at least in Denmark. So that's how we report and then see.
Very few know about it.
Yeah, all the nerds know about it. So that's how we see that our portfolio is aligned with society and these targets. And then we're very simple. We use EPCs, so we use energy performance labels. That's where we are right now. It's in itself has been difficult to get to a stage where we have access to EPC data and put it on our loan books, but we are there now. And I would say that gives us the best of the worst view of how our portfolio is performing and how it's aligned. But it also gives an view that around 60% of that portfolio don't have an EPC label. So there's a very large dark number in our loan books that we don't know how it's performing. And that's because that's one of the other questions going back to is that we have to progress how we perform and measure. So coming up to consumption data and so on. Yeah, but that's where we are now. Yeah.
Cool. Peter, Is there anything left for you?
It's not easy to be last. It's, basically, all the messages that are out there that has been mentioned. I would say that it depends on who you're talking to. If we're talking to an international investor, it will be the Krem curve, it would be certifications. Many investors think that they know what certifications are about, but many of them really don't. But they use them anyway. And all these rating systems that exist, that's for an international audience. When we talk to our Danish customers and also Danish local buyers of our properties, it's much more to the point. You know, it's actual consumption. It's 𝗍𝗶, of course. It's actual consumption because that's what the customers are paying for on the bill every month. So that's very important. And then it's actually in conjunction with all this, it's the fiscal climate risk. So how is the exposure of our assets to whatever hits us?
And you mean as a fiscal, it's flooding,
rising sea levels,
yeah.
and
storms.
Yeah. So that's those are the metrics, and it's very limited.
But I hear you all kind of like say that, I mean, I would be the devil's advocate here, because I believe also that democratizing the access to utility data, and that's also the very core of what legacy is about. And we have the benchmark. We have benchmarks on utility data on 2.2 million buildings. But then from our perspective, I would try to ask you three gentlemen, why on earth, if we have the data, we know that it's there, why are we still maybe stuck in this proxy sleeping bag, you would say, because we know, at least some of the market knows that the data is there and we can fetch it if we want to. Do you have any qualified guess or prospects on that?
Yeah, we're not using the data that we have. We have all the data in the world, basically. You know, some of it more reliable than others, but we have a lot of data, and we're talking about at our company AI and all that. Well, yes, but we need to just put the data in the right bucket before you start applying all these sophisticated tools. Otherwise, it's just shit out. And but we have all the data basically that we need. You know, always get better, but for now. But if we sort of take, we're self-financed as a pension fund, but we sell properties to investors that are not self-financed. They need to obtain loans at Morten's business.
Hopefully.
So hopefully, so we need to be on top of that too. But when we sort of approach them with real data, to be honest, they don't really know what to do with it. So now great, you know, you have an energy consumption of this and that, and it's picking up, and it's been going down. The carbon intensity with all the biomass is always going down, and so and it's not really incorporated into the finance model.
That must be a call for action for you, Morten, right?
Well, from a banking perspective, I mean, the word 𝗍𝗶 or energy labeling is relatively new, right? So it hasn't been within our lingo to talk about 𝗍𝗶 or LCAs or actual consumption and so on. It hasn't had any weighing in our way of doing financing because it hasn't had any consequences yet. So I would say that 𝗍𝗶 and the word is new to the banking sector. It's 3 or 5 years old, and we need to look at 𝗍𝗶s and how should our loans be performing and what levels should they be on. And then I think that at least now we're getting a wake-up call from, again, a term for the knowledgeable, something called the building director, with this new legislative frameworks that's coming to hit the real estate sector or building sector in Denmark, which is very much putting 𝗍𝗶s on a formal, right? So you have to have an 𝗍𝗶 and you have to have it at a certain level in order to sell or lease your property going forward from 2030. So from a banking perspective, suddenly we have a risk, right? So we have a lot of loans, right, in the lower end of the 𝗍𝗶 scale, and how are we supposed to be moving those?
So I hear you say that not winter is coming, but consequence is coming.
Yeah.
That's from two. Yeah. So basically, we have the data, consequence is coming. Then Johan, on that note, how would you, if that stacks up, how would you see the world? And then I would believe that you would like to get better finance, or what were your dream scenario?
Yes, no, I definitely agree. Sort of, we have the data, and yes, consequences coming, but we're also seeing a sort of still there are that pricing has not really, not only talking bank financing, but also buyers of real estate or investors. Sort of, it's easy to sort of preach to the choir, but there's also you could see multiple real estate assets across Denmark that are sort of with bad EPC levels and bad energy performance, but if they're in a good location, that's still a liquid asset. So we haven't sort of seen, at least in the upper half of the market, we haven't seen sort of big price impacts from poor performance yet. But I agree, sort of when we talk about the worst half of the market, we see sort of legislative push to improve assets, and there that sort of stranding risk becomes more real. And there I think it's also a much easier case for Morten to sort of, whether it's carrot or stick, but at least sort of really sort of tightening, you could say, requirements to the lower end, or sort of rewarding people who sort of are able to move out of that tail end. So that we're definitely hoping to see more of, and sort of we've had numerous dialogues with Morten and some of his peers, and of course certain like terms are important to us. Sort of a slight discount on the margin might not sort of make the biggest difference, but if we can work with some of our on some of the other like loan terms, then it becomes really important, and that would really help sort of accelerate, say, the brown to green journey for a lot of real estate owners.
So what I hear from you, that maybe one key area to go very deep on is the lower part of the market, in terms of this is where Morten has consequences coming, and you might have a investment rationale for brown to green real estate. Hence, this is where you will have some win-win de-risking outcomes if you, as a Nykredit client, comes to Morten and say, hey, we have these brown assets that we will put capex in, and then Morten might be at least more tempted to offer some favorable terms. Is that something you could see happen, Morten?
Well, yeah, absolutely. But again, we have to put in the context of this, because I mean, all courtesy to 𝗪𝗏 and our colleagues over here is that when we get outside the borders of Copenhagen and some of the largest cities in Denmark, you have some other issues. I mean, this is what you call a secondary market or third tier market, right? So it's a different market, it's different valuations, it's different investors, and for these clients of ours, they are not aware of EPCs, they're not aware of that you should engage on these topics. This is totally new for them. When you get inside the larger cities in Denmark, well, I don't think you have this. We have clients and we have companies who are pushing the boundaries, but we also have very liquid assets, right? So it's not, the pricing is not there yet. We're seeing with some international clients who are coming into Denmark and really pricing this in, pricing in the green or the brown discount, but we're not seeing it in the market. There isn't a push necessarily on this yet, I would say.
I would say it's not easy, but it's easier to identify the really bad EPCs. So you need to do something about it. And most often also for other reasons, like the EPC, because they have neglected property, basically. So moving very sort of dark brown assets to a green estate, that's fairly easy. What we are sort of looking at is how do you actually get a green premium? When are you green enough to have done enough? And the EU taxonomy has sort of defined that, but we're not really there yet. That has been totally imposed. But we had a look at our portfolio, which is from around 41-42 billion Danish kroner, and we sort of calculated a brown discount on the worst EPCs, and it cost us around 150 million Danish kroner, sort of in investments that needed to be made in our board. They were like, well, you just cost about 100 million, what's going on? And then there must be a green premium then too that can counter this, because we also have new assets, better uses. But that was really difficult.
But it sounds to me like it's the discussion about the chicken and the egg, because if you say this, Peter, that you actually now underwrite to say this is a brown asset that needs some love in terms of the valuation, and Johan, I would assume that from a private equity perspective, with a very short time horizon, at least for the fund structures side of you, then I would also imagine that the transaction teams would also look at assets and maybe bring to the table of a transaction that this is a brown asset, so you cannot call for this price. At least that will be if Peter's rationale stacks up. Can you maybe elaborate a little bit? I believe that is also a part of your investment philosophy, right?
Yeah, so when we invest, we will always underwrite sort of an improvement plan to take the assets to sort of the necessary performance. But of course, then we can only do that in the cases where we think that green premium exists, or where sort of the assets are cheap enough to sort of go on that journey. So of course, we cannot make buyers sort of pay a green premium. That needs to sort of come from them, or like from legislation and so forth.
Or from Morten, that are maybe giving you a little bit upside on the financing terms for that transition plan. Yeah. But that's so it's about, I can hear that from the public, where a stakeholder like Peter, who don't leverage his investment by external finance, and from Johan, who is reliable from external finance, and from Morten, who is helping Johan and other real estate investors. Then there is, from a green premium, exists both from the pricing of the purchase of the asset, but also of the underwriting of the assumption around the exit price. And then kind of like also from the little bit the dark hole right now is how do finance then also support this movement of capital from into brown to convert into green? Is that a little bit where the market is at now? Cool. But then from that perspective, now not winter is coming, but consequences coming, and the EU building directive with the primary energy demand and so on are going into these subjects, and then also pushing upon the proxy that maybe it's fine enough, but to use the EPCs, because to be honest, the EU have no other options right now. They need to have some kind of sound metric that are present in all the building codes in Europe, right? So it's not to bash the European Union in this case, at least. But on that note, then once again, if the transparency of the utility data and the access comes into play, what are your projection of such a transparent carbon market, at least from a real estate perspective, Johan? What would you say that if all starts to have kind of like transparent performance of the utility data, do you believe that could push forward the development, or is it what is your perspective on that?
I think right now we sense a lot of anxiety in the market, and especially sort of also in the financing, that people are aware that there is this sort of stranding risk, but it's actually hard to identify. So which assets are we talking about, and what will the cost be to transition them? So like when we get sort of more of a like common publicly available view on the performance of every building and the cost of improving it, then this sort of stranding risk becomes more of a sort of, it's more tangible and more quantifiable. So because any asset can be improved, it's just whether the valuation can sort of support it. So I think sort of replacing that current anxiety with more insight, that would be sort of a positive consequence. But of course, there will be some people having those assets on their books that will sort of face some of these consequences if they don't act in time.
Yes, so there are some, you could say there are some informed investors and some ignorant investors, and then there are the banks in the middle who have the bad and ungrateful task to identify what are these. But Morten, to go from your perspective, from a Danish perspective, and with the Danish realkredit system, where you are basically having a little bit of an ungrateful task, at least from my point of view, that you do a loan on a 30-year duration time. What is a stranded asset in 30 years? Can you try to put a little bit of perspective on that thought?
Well, I think the whole discussion here and the grateful task of being a bank and having a 30-year mortgage system. I mean, for us, this builds into the belief that we are abiding to right now is that we believe that the real estate market is going to split into three parts, right? So we for a long time had a low interest rate in Denmark. It was cheap access to capital or debt. Now we have a more normal situation where we're back at an interest rate that is more normal historically. But then we're seeing new factors being pushed into the pricing of assets, right? So you have your energy labeling or actual consumption, and then you have your climate risk, right? So we really believe that we have a splitting of the market where you have your green premium perhaps being more explicit, right? So you have the largest cities where you have attractive locations, you have a low carbon or low consumption buildings. Professional investors are going to buy and sell to each other, right? So this is going to be a more professional market where these investors are engaging with each other. And we also seeing these actors exiting from properties that are not able to be on that curve, right? Where the capex is too high and the risk is maybe too big. So they're exiting these buildings, right? And then you have your brown to green curve, which is also where Johan and others investors are looking to grab those buildings where some are exiting or don't have the capital or the willingness to lift them, right? And then you have the unfortunate role as a bank, right? You have the last curve, right? So you have your secondary market or third-tier market, where it becomes more local investors, right? Who are buying and selling to each other, who are not aware of these things that are hitting them. So this is where we as a bank has a large responsibility to engage with these clients, saying, where do you want to position your assets going forward? And if you're not positioning or at least taking note of what is happening around you, we have to price this in to your terms going forward. And this is where we come on to differentiated pricing or client incentives, as we call it, like where we look at pricing and terms.
So you see a more fragmented approach to different clients due to the risk of those assets. And I also, as I hear you, I also hear some of the liquid real estate investors are kind of like doing business together, and then maybe some high risk assets are being pushed down to a less liquid investor, and that might also be.
Yeah, absolutely. Because I mean, I really believe that if we are to be relevant towards 𝗏𝗏 and other clients who are at the green curve, right? These guys are really pushing the boundaries on putting the capex, developing low carbon buildings, and saying, well, this building that I have right here, I don't want that to be evaluated towards a traditional building. This is something new. This is a new asset, right? And if you want that financing, you have to show me that you're not giving me traditional financing. I want something more, right? So these guys are really pushing us.
Yes.
And if we are to be competitive in that market, we also have to
so you have
a different value push.
You have yet another ungrateful task at hand
to
kind of like is the stick or the carrot the larger one, right? If you are punishing the poor, so to say, it's also a little bit of a ungrateful perspective to put forward to the broader housing community, at least in Denmark. That's a fair enough point. Peter, what do you see from? You have a slightly shorter time horizon on your investment strategy than example giving Johan, but still, I believe that market conformity and these aspects are still on the radar on ATP's real estate.
We have a much longer horizon. Yeah, actually. Basically, we consider ourselves long-term investors. We do sell properties to adjust to the strategy that we have. But when we build or when we buy, we build and buy to own. So for us, it's 30 years. That's not a long-term strategy. So we don't build anything that we don't want to own forever, basically. At least initially. So that's where what I think is missing, and where I think that that transparency can actually help, is that to basically establish a dialogue also with the customers. Because today, how much time have we spent arguing about combustion engines and the move to electric vehicles? How much time have we spent talking about the carbon footprint of flying on holiday and so on and so forth? But how much time have we spent talking about the actual consumption and the footprint of our buildings? How many of you who are sitting in this building actually knows what the footprint is? I believe it's not very many. And I know when we ask our clients if they actually know how the building that they're in, how it performs, they don't really know. So there is, we need this transparency to actually tell what is the consequence of the actions that we take? What is the consequence of the decisions that our customers make? Why is it better to actually move into a greener building instead of a brown one?
But then, if I hear you say more or less, you circle a lot around the same things. But then a thinking experiment. If you know, Morten, the partnership with 𝗥𝗍 and Nykredit is all about creating this transparency about utility data, making these reduction plans, having a solid capex plans for the reductions that you need to have that conversation with your clients. Then I would maybe take the whole through the chain here. So if a thought experiment, if an investor like Johan was kind of like giving that reduction plan, converting an asset with the tools and transparency that 𝗥𝗍 provides, with a brown to green asset, with a capex plan, doing all these great stuff, and then is presenting this asset to Peter at the end of such an executed plan, then Peter, would you be kind of like, how would you look at that asset? Because then you have kind of like seen, okay, 5 years ago, this asset was, let's call it distressed or stranded or whatever we call it. Now there has been kind of like been done a lot of homework, and now the performance is up. How would you look at that if that was a office portfolio that you were presented? Would that be a plus or a minus in the due diligence?
Sure, it would definitely be a plus. Sure, a plus and minus. But anyway, it's of course it's a plus. It's always easier to make long-term decisions when you actually know what you got in your hand. You know, how is it performing? And this is just one metric. Dozens of other metrics that we look at in terms of many other things. But the more sort of concrete actual data that you have, the more sure we can be that we are making the right decision, whatever the EPC is, because the EPC is people know it's the best that we have. It's not just sort of dismiss it totally, but it's not correct.
So here, Johan, I would like to. Peter says yes, definitely on the plus side. Maybe he would understate that in a transaction if he met you. But how, from your perspective, if you have done now these brown to green strategies, and you said that your access to capital from that you raise institutional capital, but I know at least from my time in NREP, sometimes it's also about, you have some investors, but you can also meet some of these players out in the exit processes, bidding on some of the assets. So from your perspective, how does such a journey of a 5-year transition plan with a solid performance track record, how would that play up in your exit strategy?
Yeah, so I think from our experience, it is clear that we widen the pool of potential investors if we have sort of a green, well-performing product, again, it would most likely have a higher net operating income, so trends directly into valuation. So it's sort of a no-brainer that if we can show this better performance, we can talk to a broader investor universe, then that's obviously an upside. And sort of, I think, again, this is not news to us. This is a strategy we have pursued for 10 years or so. But with sort of the consequences coming from the EU, with more and more investors seeing the same, then of course that we get more proof points to that. And yes, there are also cases where this is not really moving the needle that much if the asset has a lot of other good attributes. But we are definitely seeing sort of, yes, wider investor universe, and that usually translate into more competition, lower yields, higher exit value.
Cool. But that sounds like in some, at least in some, and there could also be, it's also fair to say, if just to maybe also elaborate a little bit on your point, there can be many different kind of like, so if you sell residential properties, if you sell logistic properties, there can be many kind of like different scenarios where maybe there will be higher potential for some asset types than others. We are also coming into a closing time, but otherwise I would, in a little bit, there is a 6 months to Christmas, but still, I will still go a little bit. If we can be a little bit, now there is not too much to be hopeful around the world because it's so disturbing what is happening. But if you could have 3 wishes coming into play and reality and be grounded in the market in the next 5 years, what would that be? That could be heavy CO2 taxation, or it could be a solid finance framework that actually really rewards decarbonized assets or whatever. Now I won't put the words in your mouth, but from that perspective, what could be the 3 things you would love to see, Peter, happening both in maybe in Denmark to start with, and then also maybe going out for the European market?
Working at ATP, we're always refrain from going into politics and commenting on regulation. I can have a private opinion about carbon tax. We have one that is completely useless. But anyway, it's I think that's to put a price on a real price on carbon, whether it's through taxation or other metrics or other means, that would make it a totally different ballgame, in my opinion. So if we could do that, that would be great. That's my personal opinion. That's one thing. The other thing is stop confusing us with new regulations. The EU taxonomy, 𝗫𝗫. I actually think that regulation is in many ways great. It's a way to make us do what we cannot really do by ourselves. So I think that's great. But don't spend our time arguing with consultants and accountants about how to report. That would be great. And the last thing is actually to if we totally sort of the charge what I mentioned before, actually, if we could have a real discussion with our customers, so the general public, about what good looks like. When is it good? When is a building performing well? Because it's taxonomy obviously provides some of the answer, but does the general public know what the taxonomy is not? So to actually have that, so we if it's to put a star on it, not to buy American, or is it like in the same sort of sense, you know, something that is generally accepted. That would be
great input. Let's hope that comes into play. What about you, Morten?
Well, I'll dare to go into politics because right now we are having the building directive is being implemented right now in Danish context, and they're setting the bar for what should a bad building look like. And I hope they set that bar high, and I hope that there's going to be some sort of sanction behind that. Because what we are seeing with the EPC or energy labeling in Denmark is that it's in the law, but it's not being affected because there isn't any sanction and there is low awareness around it. So that would be, our dialogue with clients would be a lot easier if we could say that, well, this is something that is coming and this is something you have to do. You have to move your assets, right? And then the other part is that, well, we right now we are asking our largest clients, and we're also going to ask smaller clients that they have a transition plan, right? So we're going to ask them to have an EPC on their assets. We're going to ask them to have a plan. If it's D or under, and we're asking them to set a target. And so we're asking them for some data, right? And I would wish that it was a lot more easier for them to access all that data at once and updating it and delivering it to us. So that is dialogue we have with Legacy. But
yeah, at least.
but just push this button and then you're done, right? At a low cost. That would be great. So
I can also hear, but taking back from what you said before with a more fragmented market, then I hear you calling for a more cost-efficient way to help clients meet the requirements in the building directive.
Yeah. So we can, because then we can follow clients each year where we have our yearly talks and say how your portfolio looking, how is your plan looking, what does need to be financing. That dialogue would be a lot easier, right? And then going forward, we can benchmark loans against each other and so on. So there will be a lot more features that we can work with.
Even out the playing field and much more transparency. That's on the Christmas list for Santa. Yeah, cool. Johan?
Yeah, no, I think sort of the more line of sight to sort of regulation. It has been a bumpy ride the last year or so with the CSRD first in and then out, and EU taxonomy sort of still a bit sort of up in the air, sort of how much effect that will have. I think sort of from a Danish perspective, we've actually seen a lot of good regulation coming through, especially sort of the LCA requirements and sort of the requirements to build with low embodied emissions. Like if we saw that replicated, say across Europe, that would be a huge deal. And then on the operational side, I think sort of ultimately it comes down to that the price of carbon is sort of not existing to a sufficient level today, and it's probably not coming sort of anytime soon. But still we do see incentives to do better just through sort of operational savings. But to really accelerate this, yes, there is sort of a regulatory push that we need. We'll keep working with Morten and his colleagues to sort of ensure that we're aligned and hopefully that you guys will be able to sort of incentivize us as well in the right way in the future. And then I think there's still some like nitty-gritty obstacles to sort of doing good. Like you mentioned, we have done a lot in like rooftop solar PV and energy communities and thermal heated energy systems and so forth. And a lot of that is just sort of pretty difficult to execute in sort of at least in a common manner across the EU with sort of different legislation and a lot of like stupid obstacles. So if some of that could go away, that would also make our lives easier.
So I hear a little bit of streamlining the regulatory requirements that are maybe setting unnecessary challenges in terms of solar PVs and also sharing electricity across the kind of like the whole building stack in a energy community and so on. Yeah, but that's kind of like one of the oldest dialogue I've heard you also talking about, Johan. But yeah, but still relevant. Peter?
Now we've been looking at the regulators and coming on that. Just to be fair, we also need to look at ourselves. We need to agree on what good looks like. It's not. We have talked about it before. It's no good that I come up with some sort of scheme that looks like this, and you come up with that scheme, and PFA they come up with another, and in Denmark, and it's a fourth. We'll never ever gain any momentum in this market if we try to solve the system or the issues within our own small systems.
So a call to action to back for the 𝗏𝗏 pathways and the science-based target pathways.
Yeah, but let's keep it simple to start off with. We've all been bashing the EPCs for years because they are not precise enough. But if that's the best we have, then let's work with that. And let's put some value to a good EPC and detract some value from the bad EPC. Let's start there and agree on what to do. And I had this exact discussion with our head of investment and said, "Oh, don't push that too far. I need to sell some stuff off before you."
Yeah, okay.
But he's afraid that bad EPCs will basically devalue the value of our portfolio. That's great that he's a break.
Yeah.
To be honest, because that's sort of the reaction that we need. But we need to agree on what goods looks like, and whether it costs 1% or 2% or is non-financeable at all.
But this, on that note, FOMO is a great motivational driver for investment managers. That I agree. That would be a cool. The wolf is coming and punishment is coming. Could be the end note here. Jens, thank you so much for sharing your thoughts. This has been so interesting. I also hope from the audience that you had some insightful discussion and bear along with all the acronyms and talks, but it's a little bit difficult to hold it up in a certain level. But thank you so much. I would say what I take home here is that it's a clear rationale for decarbonizing real estate, also from a commercial side. We are maybe on the tipping point that maybe many of the systemic challenges are now being removed. So let's see if the gentlemen here have 5 years from now seen the right things, and then some of the things has had, at least from Legacy's point of view, we will match this. And we have also now actually made some analysis that we are going to publish very soon about how the Danish building stocks perform against the building directive of EU. And this is, once again, as you also said, not a proxy estimate from EPC. This is real life consumption data from 2.2 million buildings. So this is where we will see this is how the building stock performs. So this is at least a modest contribution to increased transparency about how do we all look on this. And I can just reveal to you that some of the EPCs that might look good, not look that good, and some of the bad aren't as bad as they might be, you might think. So this is just one of the cool thing about science, right? Cool, but thank you so much, and thank you, and let's give a hand of applause for the. I
think we can squeeze in 2 questions
Yeah,
from the
no,
audience.
I just
Yeah, I think we can do that.
But
We already have 1 question online, so
Yeah, okay, cool.
maybe we can ask Amanda to unmute herself and ask the question herself.
Actually, I think do you hear me?
Yes, we can hear you.
Yeah. Okay, thank you so much. Yeah, so I've been looking at the Norwegian bank lately, and they are actually focusing so much on high risk in credit and lending, especially due to limiting portfolio risk, due to climate risk, both physical climate risk, but also transition climate risk. And we do also see the ECB and the EBA guidelines on climate risk. I do want to ask you if you applying scenario analysis into portfolio transition planning, investment planning, or into your CapEx analytics. Thank you.
I believe it's for you 3 guys. Not.
Yeah. Yes, I can at least answer what we're doing, and also having worked closely with the Norwegian Investment Bank on sort of, and also together with you on sort of in a different context, trying to agree some of these metrics that we should be analyzing. And yes, I think we touched about a lot what we do on transition risk. So basically, we use CRREM as the main tool there, but on the physical climate risk, there we use similar tools. We do the different climate change scenarios. And I think that was not a topic that we touched much on today, but there we're also seeing sort of real investor interest in understanding our value at risk and our exposure. And luckily for us, sort of the Nordics really seems to come out as like a safe haven compared to the rest of the world. And sort of, for example, investors have seen wildfires in California and flooding in Asia and so forth. So there we are sort of at a much greater pace seeing sort of this very fast translating into valuation of assets.
Yeah, it's very similar to what Johan said. We are more local and more local than you, and especially more local than the Norwegian Investment Bank. So we primarily focus on Denmark. And we do own a lot of seaside properties, and that's obviously an issue. That will be an issue. But luckily here, compared to many other places in the world, we have like a understanding of that issue, and also looking at it from societal point of view. 𝗬𝗏𝗺𝗵 and all these different measures that have been worked on in terms of countering this risk, and that's just not the case all over the world. There you are more left on your own devices to de-risk your assets. That's just not easy.
Great. Do we have one last question from the audience?
Maybe rather a comment. Anders 𝗬𝗏𝗺𝗵 from Danske Bank, doing partnerships within the ESG space, among other things. And really just a comment to support you in your initial reflections, and thank you very much for valuable insights for the rationale of doing or engaging in decarbonization activities. We have launched 3 partnerships within this space over the past 9 months. And when we did the initial preparation, it was very much a compliance game, looking at CSRD regulation coming, preparing for that. And then, of course, the regulatory landscape changed rather dramatically, and we had to reconsider whether this still was a valid value proposition to offer our customers, and very much ended up this is much more about unleashing the efficiency levers, as you said in the very beginning: cost control, risk mitigation, accommodating requirements from suppliers and partners, attracting investors, and even attracting talent to your business. So just supporting what your initial thoughts were on this. That has been at least our experiences.
Thank you, Anders. So that's also another kind of like reflection on that is this is the way forward. So hopefully all these 5 years from now, this is common procedure to look at lesser of ESG reporting as an accounting exercise, but more as a pure valuation de-risking exercise. Cool. Thank you so much for your attention.
Thank you.
Great. Let's give them a hand.